Today is Tuesday, February 22nd, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Steve Freed, ADM IS Vice President of Grain Research, and Alan Bush, ADM Investor Services Senior Financial Economist. Alan, let's start with the financials this morning. Why did the stock index futures recover to unchanged this morning after the sharp declines we saw in the overnight trade last night?
Okay, of course, with the increased hostilities in Ukraine, that was the catalyst for a very sharp decline in stock index futures, but almost equally sharp recovery with the S&P coming back almost to 100 points. So the reason for the recovery was there are reports that there may be some type of summit in the works to resolve some of the tensions or all the tensions. So that was the report. So far, Russia did not confirm that preparations for such a meeting had begun. But the rumor that something was in the works had quite a dramatic effect, taking the stock index futures from substantially lower to actually higher on today for a while.
And on the currency markets, what are the dominant fundamentals affecting currency futures right now?
Well, right now, of course, it's still the situation in Ukraine. And in the overnight session, there was a lot of flight to quality buying coming into the safety vehicles, such as the dollar index, the Japanese yen, and the Swiss franc. But all of those gains were given back. In fact, those flight to quality currencies are steady now to just a little bit lower. So that's the short-term influence as far as what's going on in Ukraine. The long-term influence still is the interest rate differential expectations. And I think that is where the opportunities lie to be long the pound, where the Bank of England is still on track to raise rates, and the Bank of Japan, which is still likely to be very accommodative. So I still believe in buying the pound and selling the Japanese yen.
Alan, last question. Last week, the consensus view was that the Federal Reserve will hike its Fed funds rate by 50 points at the March 16th policy meeting. What is the consensus view now, 25 or 50?
So it oscillates back and forth. Now it's back down to 25 basis points. Some of this is probably due to the heightened tensions in Ukraine. So right now there's a 69% probability, according to financial futures markets, that the Fed will raise by only 25 basis points at the March 16th meeting. Also, the feeling is now this week that there will be only 6 rate hikes, as opposed to last week when the consensus view was that there would be 7 rate hikes.
Thanks, Alan. Steve, turning to the grain markets, last night soybean oil and new crop soybean futures made new contract highs. Why, and will this price advance continue?
Well, just like what Alan was talking about, I think that the annexation of those 2 Ukraine states by Russia, Putin saying he's going to allow peace-keeping troops in those 2 states, rallied the markets grains pretty sharply. And just like what Alan said, when the president of Ukraine came out and said that he's hopeful for a peaceful resolution, the markets came back down. And then we heard that overnight, some of the managed funds took a third of their long positions in corn and soybeans off because, number one, China's not buying old crop U.S. beans. Number two, Argentina weather looks better now. And number three, most people think at the Outlook conference this week, USDA is not going to give the market any bullish 2022 and 23 supply and demand numbers. So I do think, though, that the markets are still undervalued. I think we're moving higher eventually. It looks like March through May, maybe even June, the demand for U.S. corn will be record high during that time frame. Just have to see how much demand shifts for soybeans to the U.S. Soybean oil stocks could drop as more people use biodiesel. So I think that the market still can move higher, but we just need some demand news.
Steve, you mentioned the managed funds. I mean, they've liquidated maybe a third of their position. They're still fairly long, though, correct?
Yes, they're down to 300,000 contract long in corn, which is a number that is quite a bit lower than what they were a couple of weeks ago. They're long 170,000 contracts of beans, which is on the high side of historical numbers. And they keep adding to their long in soybean oil, but they remain short Chicago wheat as a hedge against their long positions. I think in the most part, if inflation kicks in, if the demand picks up, and if we have any weather problem in 2022 here in the U.S., they'll come in and buy a lot more.
Steve, speaking to the U.S. farmer now, should they be taking advantage of this rally and selling more cash? And on the flip side, should end users continue to buy breaks?
The U.S. farmer has sold almost 80 to 85% of his old crop corn and soybeans to date, and that is higher than normal. So he's been rewarding the rally by selling his inventory. As far as new crop is concerned, normally this time of year they're about 10% sold, but they're much 30% sold in both corn and soybeans, even though we have higher corn costs due to higher fertilizer, energy, and seed costs. So the farmer is selling on the way up, and he should, because these are profitable levels, over $14 November beans and $6 D's corn. End users, I mean, a lot of people are short, and I think that that's a problem for the end users, and I think that they will be here to support the market on any breaks.
Thank you very much, Steve and Alan. Remember, the views and opinions expressed today in this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.